Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 17th, 2025, and we're diving into UnitedHealth Group's latest earnings report for the first quarter of 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. UnitedHealth Group has just released their Q1 2025 earnings, and there's a lot to unpack, from revenue growth to revised full-year guidance.
Revenue and profitability overview. Let's start with the top line. UnitedHealth Group reported a net revenue of $109.6 billion for the first quarter of 2025, which is a significant increase of $9.8 billion year over year. John, what are the key drivers behind this growth?
Absolutely. The revenue growth was primarily driven by UnitedHealth's comprehensive service offerings across its enterprise. The company has been successful in expanding its consumer base, which contributed to the $9.8 billion increase. Additionally, earnings from operations reached $9.1 billion, reflecting a robust net margin of 5.7%.
That's impressive. How does this compare to their previous performance?
Compared to the same quarter last year, UnitedHealth has shown a strong improvement in both revenue and operational earnings, indicating effective management and strategic growth initiatives.
EPS performance and analyst expectations. Now let's talk about earnings per share. UnitedHealth reported an adjusted EPS of $7.20, which is slightly below the forecasted $7.27 from a survey of 12 analysts. John, what does this mean for the company?
While UnitedHealth's adjusted EPS of $7.20 fell short of the forecast by 7 cents, it's important to note that the company still delivered solid earnings. The slight miss can be attributed to higher-than-expected care activity levels within their Medicare Advantage business, which impacted their margins.
So should investors be concerned about this EPS miss?
Not necessarily. The company has revised its full-year guidance and is taking steps to address these challenges. The fundamentals remain strong and the long-term outlook is positive.
Operational efficiencies and future outlook. John, let's discuss UnitedHealth's operational efficiencies and future outlook. The company reported an operating cost ratio of 12.4% and cash flows from operations of $5.5 billion. How does this position them for the future?
UnitedHealth has made significant strides in improving operational efficiencies, as evidenced by the reduced operating cost ratio. The strong cash flow from operations and a return on equity of 26.8% highlight their efficient capital structure. Moreover, the revised full-year guidance of 26 to 26.50 cents adjusted EPS indicates confidence in overcoming current challenges and achieving growth.
That's encouraging. What are the key areas they're focusing on to drive future growth?
The company is focusing on expanding its consumer base, particularly in value-based care, and leveraging technology to enhance service delivery. These initiatives are expected to drive sustainable growth in the coming years.
CEO's perspective and strategic initiatives. Finally, let's hear from the leadership. CEO Andrew Witty mentioned that UnitedHealth is aggressively addressing challenges to return to their long-term earnings growth target of 13 to 16%. John, what are the main challenges they are facing?
The primary challenges include heightened care activity within their Medicare Advantage business and changes in the profile of Optum Health members. These factors have impacted their planned reimbursement and margins. However, the company is actively working to address these issues and is optimistic about achieving their growth targets.
What strategic initiatives are they implementing to overcome these challenges?
UnitedHealth is focusing on optimizing care quality, reducing costs, and enhancing the consumer experience. They are also expanding their value-based care offerings and leveraging technology to improve operational efficiencies.
Key takeaways. In summary, UnitedHealth Group has delivered a strong performance in Q1 2025 with significant revenue growth and operational efficiencies. Despite a slight EPS miss, the company's revised guidance and strategic initiatives position them well for future growth. John, any final thoughts?
UnitedHealth's fundamentals remain strong, and their proactive approach to addressing challenges is commendable. Investors should keep an eye on their strategic initiatives and long-term growth prospects.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on UnitedHealth's performance in the comments below.